All right, let's start over. Let's start over. 15-minute orb. Go to the 15-minute chart. Easiest way to do it is on the 15-minute chart, but I can do 5 3-minute candles, 3 5-minute candles, 15 1-minute candles is going to give me the same levels. It's just easier to mark on the 15-minute chart. This is our first 15-minute candle. This green candle right here at 8:30, 15 minutes. We mark the top, we mark the bottom. Once we got that, anything below that you can take these puts, anything above you can take the calls, but we have to get confirmation. So we go down to the tighter time frame to get confirmation. And anything in the box, you want to play the bottom of the box to go up, the top of the box to go down. Set your risk right outside that box. So every time it gets up here, if I set my risk outside and take that put, I made money up here. Even if you bought it right here, which we wouldn't because everything is turning up. See, that's a different buy. You see that?
Yeah.
So like I said earlier, when you had got that call and I'm like, no, this time it's turning down. So same thing for these puts right here. Look at this. Get up here, turning down. Get up here, turning down. Get up here, turning up. We got you. You're not paying attention. If you don't have a MACD, now you're thinking every level is the same, but it's not. You following me?
Following you. Yeah.
So now we got snipes in this range. Snipes in this range, playing that range like we talked about, and we're waiting 15 minutes. So 15 minutes would be right here. And what did it do? It swept the top of the box of the 15-minute orb on that next candle to get them excited. Oh, it's going, it's going. They bought right here, flushed them. They sold right here. They said, let's get a put. Went back up. It never got above that, double topped on these two candles. So you can take this put because you see the MACD's turning down. So you can take that sniper put, set our risk right here.
See it.
And you can buy it anywhere between this top of this box to the bottom of this doji when it breaks. Once it breaks this doji, you are luff. You can't buy it in this candle. You cannot buy in this candle anymore. Your entry, as soon as it breaks this doji, like as soon as it breaks that doji, boom, I'm in. You can even have an order ready to go right there. And then you can already put your stop right there. And you see it's turning down, turning down, turning down, turning down. So then, boom, we get to the bottom of the box. We know, hey, we're getting some resistance. We're getting some wicks. The MACD is making this peak up. Look, it made the peak on the doji. Oh, let me take profit. Boom, right back up. Okay, is this the 50% mark of this big move? So look at our box. Top of the box, bottom of the box. We make this one big candle. Where did it ended up coming back to? In the middle, 50% retracement. So we look to the left to see what's going right. And we see that's where it broke out last time. Should have a light bulb moment. That's where it broke out. Okay, if that's where it broke out, let me see if it can retest that level. That's a dead cat bounce to go lower than the last time it went. So the breakout is the snipe. Trail, 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 trail. The retest is the trade. We hold longer. And as long as they don't break this 21, look at that. As soon as we replace, go ahead.
That retest was retesting above those EMAs that you're talking about.
It retested this zone right here we talked about earlier. Look.
Yeah.
So a lot of people looking at it to come to the 9 and go again. It swept them because they're not looking left. Look where we broke out from. We broke out from right here. Look at this bottom of this wick. Couldn't get lower. Look at this. Couldn't get lower. Couldn't get lower. This was resistance, resistance, resistance. Broke it. Support, support, support. So that level is a very key level right here. So when it finally broke our EMAs, where did it break? Right there. So we're looking for a retest of that level. And a lot of people are looking for the EMAs, but you need to look at that level. And it retested that level and went lower. And we said earlier when we was in that all the EMAs were pointing down, so no way it's going to just gap up when the EMAs are pointing straight down.
Okay.
Right?
Yeah.
So we're never gonna risk fighting the trend. If we're taking a snipe, it's little snipe to go back up, but then we're trying to get back down because the trend is down. MACD's pointing down. We go to the 5-minute right here. Look at the 5-minute at that same Same spot. So this is where we broke out from.
Mm-hmm.
Went all the way down here. The next 5-minute candle retested that zone that we broke out from. You can see it on the 5-minute too. I still got my line. See my lines right here?
Yeah.
So it broke out, retested, and then really broke. So the break is the snipe. The retest is the trade we want to hold. And then we looking at this MACD is making the peak, starting to come back up. We get out of there. We see, oh, that 200. Remember I said I wanted that 200? Look at that move off of the 200 all the way back to the top of the box. And then once we get to the top of the box, what she do? Let's go back to the tighter 1 minute. Now, so we turn it down, turn it down, turn it down, turn it down. We get boom, boom, boom. 4 candles. If they wanted to flush them, they would have kept flushing them because they had all these people trapped. But they probably blew their accounts already. So now they're ready to go back up. But what do we need to see before we can go back up?
We need to see the candle change. So the red's got to turn to green.
100% on that test. We need a candle color change. We need a replacement. We need this candle that's red that never got above. So let's take it from up here. Red. Did we get above this candle? No. Red. Did we get above this candle? No. Red. Did we close above this candle? No.
Oh.
So then the next candle closes above that candle. So if you was in a put, you better make sure you get out because that candle finally closed. And then we get a pull back just for the retest. And then it really breaks.
Yeah.
So
yeah, I see that.
So we wait.
Then,
so when it's breaking,
it's
go ahead.
10:30.
You go ahead.
No, I was just saying that when we look at this bottom portion over here, where we have the big green candle and the smaller red candle where it got above it.
Right here.
Yeah, exactly.
Okay.
That bounced off the bottom level. What was that? 4 times.
Yes. So
that's it. That's an indicator that something's gonna bounce up because, like you said, if they wanted to continue.
Right. First we get a hammer candle to the upside off of that level. So everybody that bought puts right here are trapped in that hammer. Then they DCA'd, and then they let them get back. So they let some people get out, but the people that held, they're trapped in this doji. So you get a hammer off the down move. So we came from all the way up here. We finally get a hammer and a doji, and we got above it and closed the candle above it. See, this candle closed above it. This candle wicked above. We waiting for that next candle. Next candle get above. Boom, we're in. Stop right here. That is 7 points. So the max you're losing on that is $35 per contract. But look at our upside from 52 to 80. So you got 28 points. So you risk 7 points to make 28 just now. See that?
Yeah.
So you have to set your risk. You can't just be like always, okay, I'm in and I'm out. I'm in and I'm out. Once it flushes, this is what you're waiting for to hold. You're waiting for a flush to hold. You're waiting for it to sweep the bottom of the box on a bullish day. Sweep the bottom of the box, start pointing up. Oh, look how separation. So look at our MACD lines right here. Look at that. See the purple and the white line, how close together they are?
Yeah.
Now look over here. Separation. When there's separation, we get a bigger move. Gappy, gappy, gappy. When there's separation, we get a bigger move. Gappy, gappy, gappy. When it's tighter, it's going to be a more trickier move. They're just waiting a little bit more. And then, so we talked about down here, we're not touching none of these candles until green can replace. None of these greens replace until right here. Boom, entry. Now we gapping up, gapping up, gapping up, gapping up. Consolidating, consolidating, gap up. Consolidating, gap up. Once we break this top right here, then we start trailing our stop. So say if I'm getting in this range right here, because I see the MACD turning up, I see the sweep, I see the doji. I can set my risk right there. Once it gaps up to right here, I put my stop right here. And then I wait for this candle to print to that one. Once this candle prints, I can move my stop right here. And then I wait for this next candle. Once this candle prints, I can move my stop right here. If it's a big boom boom candle, I can move it 50%. Because a 50% retracement is more likely to come all the way back down. If it holds the 50% line, it's more likely to go up. So I can put it right there. Once it gets to these dojis and these wicks, I can say, okay, I'm moving it tight. Boom, on that one. It still never stopped me out and gapped again. So I can do that same trail method all the way until I get stopped out, until green gets replaced by red. And then I can look if I want to, or it might be good. But if I want to, I can see green replaced by red right here. But the candle didn't hold until this one. So on this candle right here, that's my entry. And then I have to set my stop a little wider on this one. My stop has to be at 81. So my entry on this one is still only 8-point risk. But if I take it from 73 to the 50, what is that? That's 7. So that's just a small little snipe. But you see that's turning back up. So, and we're bullish. So we wanted to get more calls. So we said we wasn't touching those puts. And then it comes and retests. And then really breaks out. And look at our EMAs. So if our EMAs are all pointing up, are we just going to go down? Or is the down move going to be a buy? When we're all pointing up, the down moves are going to be buys to go up. Same thing over here. When it's all pointing down, the up moves is where you want the sweep to go down. The up move is the sweep to go down until we can replace. And then the up move that replaces is the sweep to go up. And then look at our box acting as support. So once we got above the box, remember I say we want to go above the box, retest the top of the box, maybe once, maybe twice, maybe 3 times, and then we boom out of that box. So you could have had your stop at this retracement right here, where we had our stop earlier that never got stopped, and then those stops start to come back. And you're like, oh, that was a real good buy zone. It broke out of there, held that zone, broke out again. Hey, let's see when I get a retest. I'm gonna put my stop at the 50 once it leaves the 50. So when I get a retest for the 50, I'm buying in this zone. I'm gonna set my stop to this risk right here, and I'm waiting for it to leave this zone before I move it back to the 50. So a move out of the range that comes back and tests the 50, once it leaves the 50 again, your 50 is a great stop. Look at that, never touch the 50 again. Now it's coming back down, so you can, if you was in there, you can start getting ready to take some profits. Because look, we just broke the 9 to the downside and we held the candle underneath. So this 1 minute candle right here is vital for these people that are in puts. Let's watch it live right now. So this 1 minute candle right here has 37 seconds. So the people that got in before the candle closed, look what's happening to them. Now they're stressing. You see it?
Yeah.
But you need to wait for this candle to close. You don't have to have the perfect entry. You want to be right. And if that means I get 5 points or 25 points after I'm right, who cares? But I don't want to be wrong fighting the trend. So those people that just got that, look, this wick got them trapped. MACD was turning down all the way from up here. Now it's starting to curl up. So now we want to see green replace this to go up. They needed to see red replace this bottom to go down. So they got stuck in this range and now they're getting chopped up. And that's how we stay out of the chop, because we respect our rules. Hey, it never replaced, so I'm not taking it. I will lose all day the trade that follows my rules and loses, rather than I'm just chasing something that wasn't my rule and I lost, because I know that I'm gonna win 80% of the time following my rules. So the 2 out of 10 that I lose, I'm cool with losing them. But if I don't take it every time, I'm gonna miss the 8 that I win.
Mm-hmm. Yeah.
And then look,
I see what, and it goes back to what you said about confluence, right? So you have your orb, and then you're looking at when the MACD is turning up and the lines are wider, tighter, right? You're seeing multiple time frames, and then those are indicators like, okay, I can get in here. So
now look at this.
The
Look,
picture's starting to come
look at
together
this.
more.
Tight, 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 tight. We can get in there. Wide. We stay away. Tight, 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 tight. We can get in there. Tight, 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 tight. We can get in there. Wide. We not in. We missed it. We stay away. It get back tight. Hold that level. It replaced this green. This red replaced by green. Boom. We can get back in. You see that?
I see it.
But when it's wide, we want to be more contrarian of it. Either it has to go down and break back to the downside, or it has to go down just enough to get back tight and then go up. So we was wide right here. It just needed to go down just to get back tight and then go up. We was too wide, so it needed to go down to get back tight, and then we go up. But the trend, if we go to the 15-minute chart, look at this trend right here. So we're still bullish, and the 9 is all the way down here for the 15-minute retracement. So sometimes going to the 15-minute and marking the retracement of the 9 on the 15 like this, and then going back to our 1-minute chart and seeing where that is on the 1 minute. Oh shit, that was way down here. Saw that?
Yeah.
So the 15-minute 9 is way down here. That's a really good entry. So that's how you plot the rest of the day. Like, okay, what would be a good sweep, a good pullback? Okay, if we're still bullish, how far away is the 9 on the 20, on the 15? Okay, I would love that. And then you have more confidence in when it's sweeping down here, and then the MACD starting to curve and it's starting to slow down because it pushed there fast and it's starting to do like this and slowing down. Then you'll have confidence taking that trade in that range by the 15-minute 9, setting your stop to the box.
Real quick on this line you drew here at the 21 right here.
Right here?
Yeah.
That's the 50. That's the 21.
I'm sorry, the 50, my bad.
But I drew that off of this 15-minute chart. See? And the 9 is going up. So now the 9 is right here on the 15. See, the 9 is going to come to meet you. The 9 is going to keep rising up and come to meet the price. It's going to. So if you're waiting for the 9 is going to come to you and give you a pivot. As the price action is going up, the 9 is going up. When it's coming back down, the 9 is going to meet it. So right now, the top of the 9 is right here. So when I go back to the 1-minute chart, I can see the top of the 9 is right by the bottom of this wick right here. Look at that. So I would love a sweep of this lows right here.
So that line you drew, you're looking for the sweep, for it to come back right there at that line.
I'm looking for the comeback, sweep these levels. So this line is just a range. So in this range, we don't buy exact levels, we buy ranges. So we have to look. Yeah. It broke out from right here in this range. Look, resistance turns support. So we can take this top of this range right here all the way to this range. This is the buy zone. We're not buying at one specific place. This is the buy zone. When do I buy in the zone? When the MACD and everything starts to turn up. So if we're in the buy zone and it's still pointing down, I'm good. I'm not touching it. I'm waiting for it to be in the buy zone to turn up. The buy zone is just the indicator of to be ready for it to turn up. So if it's still turning down, we leave it alone. But as soon as we in our buy zone for the sweep and it starts to turn up, then we get in there. And then look at the 200. It's climbing out of our original box, coming to our new box. So the 200 might end up over here a little bit later in the day when this ends up down here, bounce off of that, sweep it, and then go higher because we're still on a bullish day. Look at that. Coming right to our box. Let's see what it does. Now look, it's coming to the box, but it's pointing down. Pointing down on the 1 minute. So if the 1 minute is pointing down, we don't force it. So we need a candle to get above this candle right here. So until it breaks and hold that level, it's gonna keep falling. And it might wick that level, but it's until it holds a candle above that level, it's not time to get back in it for a call yet. And then look at our 9. The 9 just crossed the 21. That's an intraday bearish cross. So that's going to bring the algos to want to sell. So what they might do is pop it all the way back up here just to get them to trap some liquidity and then bring it back down into our box right here and test these levels. And then the longer the day the harder to trade. You know. Look at
Okay.
that. Watch our
That's
volume.
good.
Watch our volume bars. Look at our volume. Look at our volume this
Yeah, that
morning.
volume, I'm paying attention to that.
So look at this morning when the volume kicked in at that 7:30. Boom. And then we tailed off. We're under the average. Right here, we got some red volume. So boom, you see that big red volume candle above the moving average. You look at your chart. Hey, we broke through the 9. Can we held? Yes, we held. Boom, entry right here. See it? Entry right here. Stop right there. See that? Broke the 9, tight state. Bust through it. That's exactly how our video of the tight wide state starts. Bust through it. Wait for the next candle. It held the 9. So we got to make sure that that next candle does the same thing, and then boom, we're in. And our stop goes boom right there, right above the candle that bust through the 9. We're giving them 1 candle risk. This is our entry candle if it holds. This is our exit candle if it doesn't hold. And then look at our MACD. Look at our stochastic. Look at our RSI. Look at our MACD. They're all aligning. They're all at the top. Very seldom you're going to have all 3 at the top. Sometimes you'll get the MACD at the top and you won't get these 2 at the top. But when they're all, just like you'll get the MACD at the bottom, but all of them won't be at the bottom. But when they're all matching up, see that all 3 of these matching up at the bottom coming up? Ooh. And it's matching our strategy, is replacing. Ooh. Multiple confluences. Volume up. Ooh.
It's
Another
10:45.
confluence. See that? Tight state. Got above. Entry right there. Exit right there. And then we get up. Boom. And then it retested this same breakout. Look, we draw a cursor across. It retested that same level. So if you miss a trade, a lot of people miss the trade and they FOMO and they get out. You miss the trade, you wait for the retest, and then you can get back in for the bigger move because the retest is the bigger move. And that will conclude our orb training for today.